Hey everyone, I've got a major update on SOFI stock that I want to share with you today. If you caught my previous video, this will build on that, especially since SOFI has been on quite the move lately. I'll be diving into the latest developments, including some options plays, business updates, and of course the most recent earnings report. My goal is to help you make informed decisions and hopefully make some money along the way. So, let's get right to it. SOFI stock. Technical overview. To kick things off, let's talk about where SOFI stock stands today. As of now, it's trading around $15.49. If we zoom out a bit and look at the past month, you'll see some pretty significant volatility. Just a few weeks ago, SOFI shot up to $17, almost $18 a share, before pulling back to where it is now. With all that volatility, there's a unique opportunity here, especially when it comes to selling options on SOFI. Personally, I'm a big fan of selling options because it's a way to get a good entry into a stock. Plus, if you own the shares or get assigned the stock, you can earn some solid passive income through covered calls. In a moment, I'll walk you through two specific plays I'm looking at right now. But first, I want to share some key insights about the company. CEO Anthony Noto's vision. Let's start with something really important. SOFI's CEO, Anthony Noto, has a long-term vision that excites me. He recently shared that his goal is to deliver compound returns of 20% plus for decades to come. That's right, decades. Not just for a few years, but for the long haul. When I evaluate a company, one of the most important factors I look at is the CEO. Back in 2021, I made strong gains on Tesla because I believed in Elon Musk's leadership. With SOFI, I'm getting the same sense of confidence in Anthony Noto. He has a clear vision, and he knows his company inside and out. He's actively involved in the details, from the cash flow to the number of employees in engineering, product design, and data science. Another thing I really appreciate is that SOFI isn't focused on creating physical products. Instead, they're disrupting the financial services industry with an app-based platform that offers a range of digitized services. This tech-driven approach, instead of traditional banking models with high overhead, puts SOFI in a great position for long-term growth. Plus, Noto is active on Twitter, now X, where he engages directly with investors. As we've seen with companies like Tesla, strong social media presence can really make an impact on a company's growth. Current SOFI position and strategy. Now let me be transparent with you. I'm currently holding a sizable position in SOFI across two portfolios. Right now I'm down on the stock due to the pullback. But this paper loss is just that, paper. It has no bearing on SOFI's long-term potential, and I'm still a holder. I'm committed to my investments, and I practice what I preach. So let's talk strategy. I'm going to look at options on SOFI right now and show you how you could potentially make money. When you sell a put option, you're committing to buy the stock at the strike price if it drops below that price. In this case, I'll focus on SOFI's March 21st expiration for options. Let's say you sell a put with a $15 strike price. The premium for this option is around 97 cents, which means you're looking at a 6 to 7% return on your investment over the next 6 weeks. In terms of a weekly return, that's roughly 1%. In a volatile market like this, where interest rates and global issues keep causing fluctuations, earning 1% a week is a strong play. Why sell puts on SOFI? Now you might wonder, why sell puts? Well, selling a put at $15 means I'm prepared to buy more shares of SOFI if the stock drops below that price. But if it stays above $15, I just pocket the premium, which is about $100 for a $1,500 position. So it's a low-risk way to either get into the stock at a lower price or earn some income if the stock stays stable. And here's the kicker. SOFI is in a great position for growth. They're expanding beyond their lending business, and they have strong non-lending revenue streams that are growing rapidly. For example, in the third quarter of 2024, revenue from their non-lending segments grew by 64% year over year. This is huge because it makes SOFI less reliant on just lending and gives them more stability. Options play, different strike prices. If you want to be more conservative with your strategy, you could sell a put at the $14 strike instead of $15. However, the premium on the $14 put is lower, about 59 cents, which means you'll make less money up front. So, it's a balance between the more aggressive $15 strike and the more conservative $14 strike. Here's a unique idea. You can actually sell both. You could sell some $15 puts for more premium and then add some $14 puts for a safer play. That way, you're diversifying your risk while still capturing some solid returns. You can also pair this with buying shares of SOFI and then selling covered calls. Covered call strategy. If you decide to buy 100 shares of SOFI, you can pair it with a covered call strategy. For example, you could sell a $16 covered call. The premium for that right now is around $1.07, and even though SOFI is trading closer to $15, there's more demand for these calls, as you can see from the volume and open interest. So you can buy the stock and lock in some income with a covered call, or you can combine that with selling puts for a more diversified strategy. Just remember, SOFI is a relatively low-priced stock right now, so I wouldn't go for leap options at this time. You can stick with more straightforward options, like selling puts and covered calls. SOFI's long-term strategy and business model. Looking at SOFI's long-term prospects, their business model is built for success. They've got a great customer acquisition strategy that works like a gym membership model. Basically, they get customers in the door with an entry-level product and then cross-sell or upsell on the back end. This approach is really smart, especially as they expand their services. The ecosystem they're building creates customer loyalty and makes it harder for users to switch to competitors. Think of it like a big, expensive government contract. Once the government spends millions, it's tough to move away from that provider. Similarly, once customers are using SOFI for multiple services, they're more likely to stay. Conclusion: my position on SOFI. All in all, I'm bullish on SOFI. The combination of their diversified business model, growth in non-lending revenue, and strong leadership under Anthony Noto makes this a solid long-term investment. My strategy right now is selling puts at $15 and $14 strikes, as well as selling covered calls at $16. I'm confident in SOFI's future, and I think this stock is poised for success. If you want to stay updated on SOFI, make sure to hit that subscribe button. I'll be sharing more insights as this story continues to unfold, and if you haven't seen my last video on SOFI, go check that out to get my deeper thoughts on the stock. Thanks for watching, and I'll see you in the next one.